Hello everyone, this is Juan Sarmiento and today is Friday, February the 28th. Okay, things are very good for this bearish account. For many months or weeks we have seen the market go up and up and up. All the while we have bearish trades. Now finally our pain and suffering, so to speak, has paid off. This is usually the case if you are a contrarian. At first, you have to go through periods of disappointment, but eventually it all pays off. I'm going to click here on P&L for the year to date, and you see that we have some losers. Obviously, some of these trades were from last year, so this might be misleading, but I want you to focus on here. On the overall for this year is $5,326. Now, granted, we had for a while a loss of $2,500. So we have recovered that and then some. All right. As usual, to check our trades, you can click here on the P&L from the opening and look, or the P&L here percent wise, and then you can see that, for example, Procter & Gamble has 381%. This is because I started with a put and then eventually sold another put and ended up with a spread. So let's take a look at that. PG. It's all very nice. 20 of March. So we have 20 days to go. Do I think that it's going to go back up? It could. Let's take a look at the chart. And yeah, it could go back up. So I'm going to get out of this one because we have made plenty of money on it. Confirm and send. Okay, let's move on. The next one up is DR Horton or DHI, and I have 124% return on that trade, DHI. And this one, there's plenty of room between 53 and 60, and we have April 3rd. That's a long time, really. Let's look at that simulated trading. It says 35 days, and I'm already here. So what you can do is give up 3 cents or something like that. And so if we close this, analyze closing, you see it says 2.20%, $2.2 in credit. Well, that's not going to happen, okay? Because that will be more than the spread of the strikes. The difference between the strikes is $2. So we actually would have to give up like 3 cents. So let's say 1.97, and this might get filled. If it doesn't, well, that's okay. Keep on trying. So create duplicate. I don't care if it gets filled on Monday or Tuesday or Wednesday, okay? So let's put good until cancel and confirm and send. You're eventually very likely to get filled, particularly if the stock continues down. Eli Lilly, LLY. Same situation, we have the maximum profit made, but there is a volatility factor there. So what I'm going to do is close. And this has 20 days to go, 22 days to go. So the difference is $5, so it's not going to get filled for 5.12. So no, we put 4.97, which is the difference of the strike minus 3 cents. And then say good till cancel. I'm not guaranteeing that it will get filled, but I'll give it a shot. It depends on how desperate the put buyers will be to buy those 140 puts. Okay, next. McDonald's. MCD. Same thing. Okay, this is going to April 3rd. It's maximum profit there. And you see this curve above the blue line, it means the current price. So yeah, that's not realistic. That happens when there is a difference in volatility between the two strike prices. I'm going to close that, and instead of 275, it's 250 the difference, right? So I'm not going to get any more than 250. That's the difference between the strikes. So 247 would be more appropriate. And then let's say good until cancel. I'm not guaranteeing that it will fill, but if it gets filled, then we got a lot of the return well in advance of the expiration. MU, this is expiring today, and because it's a put spread, they're both in the money, so they cancel each other. So I'm not doing anything on that. If I were to close that, it would be $3 difference between the two strikes. No, that's not how we calculate, because this is a I would be buying this time. So yeah, I would be I would be paying $2.60, but because it's expiring worthless, I am getting $560. So the $558, the commission will be waived, and there you go. So that's one that I'm getting out of automatically. MU. Okay, Costco. And in this case, I have until April 17th. That's a long, long way to go. And we are here. This is because this stock, we just entered it just before the collapse of the market. So imagine that. Lucky, I guess. And the difference here between my current and my projected profit is about $98. So I'm going to hold on to that. PayPal. This one, again, look at the P&L is 86. And the rest I'm just going to hold on to, okay? However, there's a couple of stocks here that are expiring today. I already discussed MU. So next is AMD. And we are here, interestingly enough, it says that the maximum gain is 280 and currently is 217. I'm positive they expired today, and what is going to happen, the stock is below both, so the 57 put gets assigned and the 50 put is exercised, so they cancel each other. That means that I'm going to get the maximum profit, which is 75 bucks higher than currently. So that 76 bucks is going to go here in my total. So we have about $5,400 in profit, if you consider that. Okay, so that was MD. We have also Nike, I think. Yes, Nike is also expiring today. And we're right here, so nothing to do. It will get filled and will give me a credit of $4, I think. No, it's not a credit. We just have to pay. It will be 40 cents. It should be 0. Okay, so the 40 cents is not realistic. So I would be, because this is a call spread, I will be buying this. So if I wanted to close that position today, I would have had to pay $43. That is not valid because they're both out of the money. They both expire worthless, both legs on that trade. WDC, we are here. Also expiring worthless today. There are two calls, and if I say analyze opposite, that should be 0. Instead, it says 41. That's not valid. Okay, that's because of the huge volatility. These two options will expire worthless despite the volatility. Okay, I got 2 other trades filled today. Never mind what is working now. I have there filled MA and XHP. That's, I believe that's home builder average. Let's go to the monitor tab, account statement, and go back 150 days. That sounds right. It said orders 3 fills. Okay, so the original trade, we ignore this. This is an old trade from last year. Analyze trade. And this is the trade today, and I simply closed it by buying it back for a credit of 35 cents. Well, I think that that's probably not realistic, but it had filled, so there's nothing I can do about that. It's probably in real life wouldn't be any more than 5 cents. All right, and the other trade that I got filled today was MA, analyze trade. Let me see, monitor tab, account statement, and the original was a short call spread, and my profit was 537. Not realistic, I'm afraid. The maximum profit on that would have been $225. So I'm sorry about that, folks. There's just nothing I can do about it. Sometimes the trade is going to feel at a more favorable price than it is realistic. So in other words, this is not a realistic result. It probably is more like $5,000. So keep that in mind. All right, and that's about it. I have one trade to go, and as you can imagine, now we have lots and lots of cash, almost the 30,000 we began with, and we have still some trades, but now we should be getting some bullish trades, and I got one LNG, one candidate, and this is Cheniere Energy. So I suppose that the oil stocks are going to try to compensate for the market loss. So that's one that I have in mind. There's another one, but anyway, very few. This is a bullish trade, and it is here already in place. So it is right here, and let me analyze it first. And it's a diagonal. Diagonals are favorable when the volatility is fairly large, and this is a diagonal, as you can see. And you can see that the short is expiring April the 3rd and the long April the 17th. And I'm risking 300 to make a maximum of 277. 324, 277. But of course you can always roll over if if the stock goes in my direction, I can always roll over the short from the April 3rd to April 17, and then it becomes a regular vertical spread. Okay, that's about it for today. Thank you very much for joining me, and have a nice weekend. Bye-bye.
For this video. Please be sure to subscribe to this channel by clicking on the subscribe button below. Once you have done that, be sure to also click on the bell so you get a notification of future videos coming up in this channel. Be sure also to click like if you enjoyed this video, and feel free to share it with your friends and family. Thank you very much. Don't forget to visit www.putgoldgenie.com. Then go and subscribe. You could simply subscribe as a visitor. It is free, and you would have access to several videos of interest for traders. You would be directed to this registration page. It is free. Once you have subscribed as a visitor, feel free to go to the tutorials and select the free videos. These are videos of general interest for all traders. Thank you very much.